Hello and welcome to Premier Study in Investing. It's great to have you. Thanks for stopping by. Okay, my friends, welcome back to Premier Study Investing. Well, it has been quite some time since I made a video, primarily because I've had nothing to say. I've listened to a lot of people since the war broke out with the Strait of Hormuz and the situation with Iran escalating. And what I've basically said is that I don't know. I'm not a war analyst. I can sympathize with people that are doing that full time. They are in the habit of taking podcast interviews. Some of the names that come to mind are James Bianco, Stephanie Pomboy, everybody that comes on Wealthion, everyone that basically comes on TFTC, Doomberg, of course. I haven't been listening to Double Line Capital as much, but I do like Jeffrey Gunlock. So today what I'll really say is I haven't put out a new version of Modern Portfolio Theory because to me, the whole market basically turns on the war. I mean, I really think that. I think the only other competing narrative is the AI story. Obviously, chips have really gone crazy. And in a sense of honesty and humility, I mean, I came out of a Master's of Finance program in 2019. I came into the COVID era. I played around with some ideas. One of my early experiments was supposed to be, why don't I put equal money into Broadcom and then a second amount of money, so that being equal parts, but take that second part and divide it up among 11 basically microcap plays for the the health scare problem that we had from 2020, 2021, 2022. Really, Broadcom didn't do anything great during that period. It wasn't bad, but it wasn't great. And I really got sucked into sort of the news buzz about how are we going to stop these lockdowns and all these other things and reopen America and rebuild the supply chains and find a solution, right? I mean, I was very captured with that story. Well, none of those stocks have really done well. A number of them have actually gone bankrupt, while Broadcom is up some astronomical amount since 2020, late 2019, mid 2020. I mean, we could look at it. Let's look at it. Why not? I remember doing a story a couple years ago about the CHIPS Act, about there being a shortage. Remember when pickup trucks, they couldn't get them off the Ford assembly line because they didn't have access to the chips for the computer, engine, fuel management, all those systems, safety systems. They couldn't get them. You guys remember that? Well, I basically decided as an investor to pass on those stories. I ended up being wrong about, well, not wrong, right and wrong. Right about the eventual cliff that Moderna fell off of. Then kind of saw the whole ramp up with the Maha movement and RFK Jr. and his book about Anthony Fauci and the inconvenient study, looking at the Ford study, a lot of stuff related to mRNA technology, and looked at I was just into all that, all-cause mortality, what's going on, and was thinking, okay, it seems like the story is ever changing to more and more. This is something like a failed product in terms of the number of safety signals on VAERS, right? It was something like thousands of times more vaccine problems coming in since 2019, since that rollout than there was, based on your average year, going back 20 years, 20, 25 years. So it's like, okay, everything's making sense. This is seeming to be a problem. You also have these lawsuits, you have this intellectual property, you have people becoming less and less interested in, all that stuff, right? I don't have to explain it to you. You guys lived it, and we all probably heard more about that than we actually wanted to. But that stock went from $19 or something to over 50. So totally wrong. And so made some money on the decline, but then really thought, okay, it's over for this thing. They're going to pull this off the product, off the shelves. They're going to not just do the black label warning, but Robert Malone and all those folks, they're really going to get rid of it. And that just didn't happen. Robert Malone has since stepped down. Vinay Prasad has left his tenure. And I think Marty McCary left as well. It doesn't really matter. The point is that I was wrong on that, basically. I was wrong on the bottom side of that and really didn't play both sides well enough to capture the run-up. So that really was not a one shiny moment for me as an investor. So I had someone ask me, so what are you thinking now? And I really only have sort of two interesting things. To me, TLT is interesting. 85.10. A few days ago, you could have got it for $82. And this is basically the long-term. This is the duration play. You have to have some sense of what you think is going to happen with inflation. And actual inflation versus reported inflation, I think, is actually important for us to think about. But this was the number that kind of started to catch my eye. The distribution yield is 4.57. That's over 12 trillion months. But the yield over the last 30 days, they have something called an SEC yield, is 4.93%. Does that matter a lot? It's not bad to get paid that if you have kind of the kicker with the duration element. So that has always been the play. Ed Dowd thinks that is a smart move. I think Ed is someone that I like and respect. He's a former BlackRock guy, portfolio management. He managed a couple $1 billion for them. I don't remember. He covered Yeah, he covered basically like chips and software components, or sorry, I should say hardware components during the 2020.com boom. And so he's not a young guy, and it's not his first rodeo, and he thinks that TLT is a good play. All right, the other thing that, so I definitely hold that. I mean, I wrote an article about it recently about why I'm choosing TLT as my risk-free option when it comes to the modern portfolio theory strategy, which has been working well. It's kind of plateaued a little bit with the market. We had kind of a slowdown right in the S&P 500 for, I don't know, the SPY. Yeah. I mean, it sort of had like a little bit of a pullback near around, what, 7,000? It's hard to see here. What is this? 50. This is in the last year. That's really crazy. So we got to about, oh, this is not the exact right thing. 69.40. Today it's 752. So I think this is one of the assets where if you just add a zero onto this, it'll give you the price of the S&P 500. It's off screen, but it's true. S&P 500 today is at 7,519, so 7,519, and this is showing 750.03. So it's essentially just add a zero, and it'll give you the S&P 500. Well, I mean, in the last year, it's up 29%. What did it do in the last 3 months? Kind of had that kind of low, 6,200. So that's sort of the Strait of Hormuz thing, right? And now we're up at basically all-time highs. All right. One other thing that I thought was interesting was what are you going to do with like an XLE or like a VDE? These are basically ETFs that invest in oil and gas related companies. Yeah, so it's sort of thematic in that sense. It's like an energy ETF. And so I've been listening to Doomberg, pretty great podcaster, runs some kind of market research. He's an entrepreneur. Seems like he has a small team of people that, basically research a number of different things. A week ago, he gave a very compelling kind of like scenario where I thought these energy stock assets, ETFs, are sell. Essentially, his argument was, I'll just type VDE in here as the Vanguard product. Should have a very low expense ratio, meaning that they don't charge you very much to hold it. And the last 6 months, it's kind of come up to the 170, 166 level and just kind of sat there. It does pay a dividend, but it's about 2.5%, 2.32% yield. So not great, nothing crazy. So here's the argument that he made referring to Doomberg. I thought it was very, very compelling. And it basically went like this. He said, okay, you have people in the world that are oil and gas bulls, energy bulls, right? They basically believe that there is a shortage and that you have like increasing demand with decreasing supply. And so say the highest that a barrel of oil ever got to was somewhere in the $140 range. That was in like 2008, 2009 after the great financial crisis. And so you have these people that are saying, we could see that again. We go beyond that, 150, 160, $200 a barrel for oil. And he said, okay, these people exist. They're out there. They're making these claims. They think that this is what's going to happen. He says, now they need some kind of scenario that would cause that, some catalytic or catalyst to bring that about. And he said, well, these people, what could they ask for besides, what better than a closing of one of the main waterways for access to oil producing countries? And not only that, you have a hot military action from the United States. I guess NATO, I haven't followed it that closely, but definitely the United States. Trump has been complaining that NATO hasn't been much help and we got it and all that stuff. But, bombings, you guys know, you have the Lebanon-Israeli thing. You've had shots fired from Israel over to Iran. There's been threats of Iran striking other there's been a lot of talk about attempted strikes or actual strikes on oil and gas facilities throughout the region. Okay, without all the details, right? Because I don't have all the details. But if you can follow me and say, yeah, generally that's all happened in the last 3-4 months, then we can stick with Doomberg and his argument. His argument is, these people should be thrilled. This is like, what more could they ask for? Like, what better scenario could they be looking for their, bull call of $180 per barrel oil than this? You have blockades, you got to pay a fee and be from the right country in order to get through, and not get hit with, rocket strikes from the coastlines or drone attacks when you're coming through the strait to fuel up and go home. And he's like, where's oil? They're like, oil's stuck at $103, $97 a barrel. It depends on the grade, whatever. But you know what I mean? Assuming, he argues, hey, it's not a homogeneous product. The sweet light and the dark heavy and the high in sulfur, right? You can't take every shipping container of oil to every distillery. It's not a distillery. What do they call those things? Anyway, where they like basically clean and convert it into all the different grades, diesel and heating oil and gasoline and all those different things. Refineries. Yeah, refineries. He's like, okay, so it's not a homogeneous product, and you can't just take all oil fields to any and all facilities. But still, he's like, it's stuck at 107 or 103 or whatever it's at today. He's like, what more would these people need to have happen? Now, you get into some stuff that I think is interesting from James Bianco, because the thing that I've been commenting on these videos is these people are not war analysts. Guys, like, they have no ability to predict the future. I don't think any of us do. None of us have visibility into how is Iran going to react, and how long is the stalemate going to hold, and what will be the global supply shock eventually, and how far down will some of these major countries draw down their reserves, and what about the countries that don't have reserves, and what does that do to manufacturing and shipping lines and distribution, supply chain stuff coming from like a Bangladesh or not Taiwan, Thailand, let's say, so Vietnam, some of these places where a lot of goods, they're manufactured there, and they're consumed by Western nations. Like, well, what if they can't, keep doing what they've been doing? Yeah, I don't fault him for that. I think what else can you ask like a Jim Bianco to do is to say, well, here's the situation. Like, if it stays like it is, this is what we think. If it gets worse, this is what we think. If the Strait of Hormuz improves, this is what we think. So you have like a good, middle, and negative scenario, which, I mean, hey, he should do that. He should run all the numbers, and look at the best scenario analysis he can do. But I guess my point is he has no ability, in my mind, to put any weights on those three scenarios. So he could equally weight them. He could say, like, S&P 500, if things go really bad, is, instead of where we are today, 7,500. Let's say his bear scenario is like S&P 500 at 6,000. Let's say if things stay as they are, then the S&P 500 stays here. And let's say the Strait opens up and everything goes great and everyone's happy and optimistic, then let's say like 9,000 on the S&P 500. So he has a 6,000 call, a 7,500 call, and a 9,000 call. I don't know if those are his numbers. I don't think he gives those, but I'm just putting numbers in for this example. Well, how is he going to weight each scenario? If he does like equal weights, then I did like down 1,500 points and up 1,500 points. The average is S&P 500 closes where it is today, 7,500. I mean, is that worth paying a huge fee to that guy? I'm not saying he's bad. I like him a lot. And I think every person that is like getting in front of a camera, including me, and trying to talk about, well, this is what we think about end of year forecast on equity markets or I mean, bond markets too, I suppose. It's sort of a different story with the accumulated GDP, debt to GDP, which is pretty interesting. I just want to pull this up real quick. So debt to GDP levels, ratios. Let's do ratios for top 20 economies, which is what I typed in the other day. It sort of shocked me. I don't know. What do you think is going to be at the top of the list? Japan. Okay, we should have known that. Japan, 204% debt to GDP ratio. Number 2, Italy. And number 3, U.S. is in the number 3 spot at 125% debt to GDP ratio. A lot of people are saying Luke Gromen. I mean, he kind of likes to argue. He's one of those guys that likes to argue where he basically sort of, the longer you listen to him, he really gets negative, and then he says, we're either looking at a default or a currency reset situation. He's like, there's not going to be enough tax receipts in order to like cover the service payments on these bonds. He said you either got to take it from, I was listening to him the other day when I was at the gym, you either got to take it from the military, he's like, that's not happening, or you got to take it from the older folks, so entitlements. He's like, that's not happening. He said he doesn't think that those are politically viable, which I would agree with him. But he said even if they were politically viable, here's how much money you would have to chop out of those two programs. He's like, it would be 20% of each. It's like, do you think that they're going to be chopping 20% of entitlement spending and 20% of military spending? Now, I don't know. I didn't follow him very closely on the numbers. I was just listening to what he had to say. And since it's kind of like, I just took it that he probably ran some numbers, and those are generally about right. Okay? I mean, he's putting his face in the camera and going public, and I'm sure like he did some kind of back of the napkin work on that. So anyways, what I was saying is, I mean, my basic confidence on any of these analysts to say, well, here's where we think equities are going, when they are required to make some forecast or assumptions on what's going to happen with the war, I don't think any of them have any idea. I did Masters of Finance. I did CFA Level 1. There was zero about that issue of international politics, war relations, new leadership in Iran's ability and willingness to go to war. Like there's zero of that. I'm just telling you, there's zero of that. These guys that they have CFA or they went to Stanford MBA or whatever, they don't know. They don't know anything about this. They're just doing the best that they can, which is scenario analysis. So France, going back to debt to GDP, then Canada, then UK, then Saudi, Russian Federation, Brazil, India. That's kind of cool that India's low. Argentina, That seems weird with all their defaults in the past. It's like, okay. Spain, I don't hear great things. I mean, it seems like all of Europe, the smaller countries, really struggled. What was that guy? They were called the pigs. I was watching something about the kind of internal fighting among countries in the European Union, and they have these, there must be 4 countries called the pigs that are, it's like a derogatory nickname of countries that are problematic to the EU because they either have like huge debt or they have problems with their currency or another currency. It's their debt to GDP problem essentially. Is that right? Yeah. So the pigs was Portugal, Italy, Greece, and Spain. And so Spain is on here. Is Portugal on here? Portugal is on here. Italy's number 2 though, so that's the I in pigs. Spain, I say Portugal, Greece, Australia, huh? Turkey and Switzerland. Interesting. Germany. Well, anyways, the point is, I thought the bond investing part really requires you to think about another reduction. Yeah, because the United States just had AAA rating on their currency, on their treasury bonds, I should say, and it got downgraded, right? I don't know, there's 2 out of 3 agencies that downgraded it since I've been doing this channel for about 5 years. So definitely it's not like the gold star. It's still the world reserve currency. I mean, I don't think people are going to switch over to the yen. Certainly not. I don't think people are going to switch to the yuan in China. Yeah, the yuan. Or, I mean, Bitcoin. I mean, no. Gold. No. I mean, I think the U.S. Dollar and U.S. Treasuries are going to continue to be world reserve currency. There's some really interesting work that, oh man, Scott Goodwin, and who is that girl that he always works with? Whitney Webb, right? Scott Goodwin did something really interesting. I would actually like to read his book. He wrote a book called The Bitcoin Dollar, and his idea is basically something like Bitcoin used to be a freedom product, and then it got captured, and now it's basically through like USDC, DTC, basically through like stable coins. I can't remember all the things, but the argument basically goes that like you have these huge buyers of U.S. Treasuries in these crypto companies, and I think Tether owns like an incredible amount of U.S. Treasuries. Not as much as Warren Buffett. I think they always say Warren Buffett owns like some crazy amount of like the 2-year bonds or something. He owns like 5% of all that's out there or something, some real crazy number. But they're basically arguing that like these Tether and these other crypto companies continue to, in order to be like have a dollar backing or like a one for one ratio between like a stable coin pegged to the US dollar, they need to have assets that are like dollar denominated assets, so they're buying short-term US Treasuries. And their argument, Scott Goodwin's argument, is something like this is basically like a CIA plan, some smart people in the government plan to create new demand, like create a whole new brand new demand, not just for Americans, but for global investors that want to get involved in crypto. It's going to be all these people wanting to hold US dollars, digital dollars, or stable coins pegged to the dollar. And that's what they want to save in for, and basically like hyperinflation protection. Like if you're in Egypt or you're a Syria or you're a Lebanon or you're a, we'll just stick with those for right now, maybe in Argentina in former times. What are you going to do? You're going to get your money, you're going to convert it on your phone to a stable coin pegged 1-to-1 with the dollar, and then you know that whatever crazy thing happens with your currency this week or tomorrow, you're good because you've already like stored your money in US dollars, which is, we would assume, like stable in terms of inflation. Interesting idea, right? Is that going to be enough to save things? You start to get into these really weird ideas that I've explored that I think a lot of people, they're sort of far removed and far into the future, and they have these big kind of like scary events. Whether you're looking at like a David Rogers Webb, I spent a bunch of time looking at his work, and even advocated it to some people that I knew that like, hey, be aware of this. I don't think David's wrong. I just like lost the, I guess he was convincing to me. I just lost the fever a little bit. You know what I mean? I don't know why. It's weird. So, I personally don't really hold that much silver. I bought about 10 ounces, I think, just as a test, at like $39. Right, I went up to 70 something. I don't know. It's like a $400 investment when I got into it. Now maybe it's worth $800. So I'm not like a big precious metals. I have much more in crypto, which is down a lot. So I guess what I'm saying is, I like doing YouTube content. I like interacting with people. I like modern portfolio theory. And I guess in some senses, the gist of all of what I'm saying is that's what I've been seeing. That's what I've been thinking about. This war forecasting is a big problem in my opinion. And that maybe none of us are actually really able to navigate these waters if the market is really dependent upon this thing. So the only other place I can really think to go for sort of like a good gauge is, what is her name? Her name is also Whitney. There's this lady that she also worked in basically commercial real estate, which I used to work in commercial real estate, so I find her very interesting. Melody Wright. Melody Wright is her name, right? She likes to come in and talk about foreclosures and delinquency rates and stuff like that in the U.S. housing market, and she's saying that we need to have a big repricing event and what all that would mean. And but dude, I've never invested through a bubble like this. Like I mean, I'm aware as everyone else of this AI narrative story. I think some of the nonprofit advocates that are coming out asking for controls, asking for this to be stopped immediately, asking for like a multinational like treaty or like similar to like a non-proliferation. Sorry, pact, like we did with nuclear. That's what we need to do, and that this needs to be absolutely regulated like crazy. But the people that talk about that, I mean, they're raising money, they're trying to stand up to the tech lobbyists. I mean, they're not going to be able to. I just don't see how they win. They're concerned about AGI. They don't know when it's going to happen. They think that it could happen anytime in the next 2 years. You have a bunch of college graduates, which I wish I knew more college students. Now that I'm in my mid 40s, I don't really interact with people that talking all this weird Gen Alpha language. That's really interesting to me. How they develop their own vernacular, extremely odd vernacular, and apparently drove everyone crazy during the pandemic with that stuff, parents and teachers and all that. How they're maybe coming out of college. Are they coming out of college yet? Maybe some of the older ones are, and they lack some professional skills in getting hired, and they're also super pissed off and basically protesting. You can hear people protesting at college graduations apparently that people they hate AI. Which is interesting because all the podcasters, right, and all the people basically that are older, like my age, making money talking about stocks and their portfolio is awesome. They're talking about productivity gains and robotics and eventually like this is going to be a problem, but like in the near term, it's going to have like huge adoption and companies will really be able to do more with less or more with the same. It depends whatever they say, however they spin it. But I remember last point on that AI narrative. It's like I don't know what you guys are making of it. I remember listening to Mark Meldrum. He is a CFA prep guy that has a pretty good following, and he was just always like quipping about how companies last year on their earnings call, it's like they just say that word as many times as possible, right? No matter what they're doing, they just say it like 1 billion times, and just like with the idea that, hey, investors, this is going to be a great year. Like we are like totally benefiting from AI right now, And he just made fun of him all the time. He's like, linear regression is not AI, you guys, or like just like real basic stuff. It's like it doesn't count, but whatever, they say whatever they want to say. So I don't know how you trade or invest in this environment. I'm not going to talk much about Revive Therapeutics. It's a penny stock. I mean, it's one that I hold a lot. That kind of has something happened NRXP and these companies. Maybe they have something to do with psychedelics, or maybe they have something to do with helping against chemical warfare. But I mean, I looked at the chemical warfare stats, and all that stuff happened mostly in the Middle East. A lot of it happened related to Iraqi military and Iraq and Iranian like wartime events. But it's also a long time ago. Almost all those things that happened, I think I queried for the last 25 years. Almost all those things happened like 20 years ago. So it does not seem to be a big element. I didn't finish my Doomberg story. So Doomberg was arguing, okay, this is really the end here. Doomberg was arguing in a convincing way. He was saying, look, if you're looking for $200 per barrel oil and you need a catastrophic moment, this is it, right? And I was like, this guy's right. Let's sell these things. Let's get out. And then he came back on the other day, and some other people, they've just been saying, well, this Trump flight to visit China didn't seem to be doing much. And it looks basically like a waiting game where the longer this goes on and people start to feel the pain globally, the stronger that Iran's position gets as far as leverage. And so we're just going to, the longer we wait, the longer the blockade goes on, and even though some oil gets out, the higher prices go, like the more sort of leverage Iran has. And they know that, and probably everyone else knows that. And I just thought, well, I don't see this thing ending anytime soon. Like, uranium enrichment, you think they're just going to hand that over if they don't have to, unless they don't absolutely have to. Again, I'm not a war expert. I have no idea. People have gone online and said, look, we had this amazing military early on strike, ultra coordinated, all these moving pieces striking these targets in all these places, and that their military is shot, and Iran doesn't have any boats or ships or defenses, and we crippled all these things and those other things. It's like, okay, man, well, I mean, whoever is still alive is still like in the same exact position of like, we have to do what's best for our country. We have these oil industries that we need to protect and take advantage of, and game on. Like, what other choice do they have? They have no other choice but to just continue to do what's best for them and their people and their country. That will never change. So it's like, how will the markets go? They'll probably go up. I mean, I don't know. They're still going up. Interest rates are climbing 4 or 5%. Inflation ticked up. Talking about hiking rates now because of that. I've just never lived through a bubble like this before. I was not around. I was not watching this type of thing in 2006, 7, or 2000. This whole run up coming out of the pandemic is pretty crazy to me. It's not like interest rates have dropped back down to 0.5% and sent equities flying. So I just don't know what to say. I don't have any answers. And so that's just, it's like, you're supposed to make content every once in a while. And I felt like, well, I actually enjoy talking about these things. So what the heck are you guys doing? Are you guys buying Micron after they went up 19% today and they've gone up like 850% on the year? Did you get in front of that Intel run up, whatever the heck that was? My friend said that Caterpillar stock had gone flying up because they're selling all these basically generators to these data centers because the data centers cannot get the contracts for the electricity from the cities or the municipalities. Has anybody been to any AI data center protests? I would like to go to one of those, actually. I'm assuming they're nonviolent. But those are all the thoughts. And at the end of everything, it's like, well, I'm lost. I mean, I really have no good ideas. Hate to tell you, but I just don't. I don't know what to do different. Besides, probably sit in gold, have a lot in treasuries. I can't tell what's gonna happen. I mean, maybe some VGT, those tech sector ETFs, try to get in on some of that chips action. But you got to watch it closely. I've been really wrong about all the pandemic stuff. I'm not like a commodities expert. I think you have to have some specialized knowledge to really make any calls on that. That's where I am. I don't really know what to say. Mark Meldrum does not like CoreWeave. He thinks that's a company with no legitimate revenue. And he was very, very right on the Beyond Meat call. He put out a video a couple years ago about how Beyond Meat was trash. And I mean, that stock dropped over 90%. I mean, 99%. Like I'm going to be surprised they're out of business. It went from like $17 to like pennies. So Mark is a pretty smart guy. I wish I had something better to give to you. But most people I feel like are like me, where it's just like, we're trying to talk about what we think we can at least put together. And we don't know. It's like nobody seems to know much, in my opinion. And that's been the talk ever since that straight closed. Is like, blah, 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 blah. And it's like, yeah, but you don't know. Like, this is a big deal and you don't know. So at the end of all that, I feel like it's too late for me to get in anymore on like the chips and the AI boom. People say it's a very narrow market, like 10 companies. These market cap weighted indices like the S&P 500 concentrates all that wealth into NVIDIA and those other big names. So that's what everyone holds to a greater and greater degree for all the ETF buyers for like the S&P 500 or NASDAQ. I can't get behind that. So I really haven't changed much. I mean, I'm just basically, like I said, that's why I haven't put out a new modern portfolio theory model because what would it matter? I mean, what would it matter? Just it's going to depend on how the war goes. And that model is basically going to tell you like, oil is great, chips are great. It's like it's a weakness in the model. It's I guess it's a strength and a weakness, but I feel like it's a weakness in this time where it's like the prices are a reflection of a bunch of things that are very subject to change in big ways. So, that's my story. Thanks for watching. Let me know what you think. I need some stock advice. Why don't you help me? That'd be great. I'd love to hear what you guys have to say. Thanks so much. We'll talk to you next time.